Hey guys, this is an update on EOS. Our last update, we had some bullish developments in place. We had a bullish impulse, not just in EOS, but across most of our crypto coins, as well as the stock market. And we really haven't done anything to invalidate anything since then. We're going to go over not just EOS, but some of the other crypto coins, as well as the latest developments in the stock market. These charts will be available in the description below, so check out the links there. So this is our 30-minute chart on EOS. And just like before, we still have what we were calling a 5-wave impulse in place. You got a 1, 2, 3, 4, 5. It follows all the rules of an impulse in Elliott wave theory. And we had a deeper than expected second wave. And ever since then, we looked like we had started our rally in earnest. We had this pivot zone between $1 and $1.03, $1.04 that we need to break through to confirm it. And the second part of that condition is that we must maintain the bottom of that box, the 0.61 extension, as our support. And as we can see, we didn't quite do that. So it's not doom and gloom. It's just telling us that we don't have an ideal setup in place for more upside. However, we have no initial indication of any further downside at the moment. When we look at the internal structures, we could call this a 1, 2, and then maybe a 3 and a 4. But when you look at the chop, you see the whipsaw within. This looks very corrective to the upside. What that means is it doesn't look like an impulsive setup. We may have more of a diagonal rally setup in place. So we're going to revisit that in just a second. Looking at some of the other coins, Bitcoin is in a similar situation, which we broke through our pivot and broke back down through it. Looks actually almost identical. When we look at Ethereum, we never even broke through the pivot. So in a way, based on our rules, it's actually looking a little bit better than some of the other coins and some of the other ones that we typically look at, such as Bitcoin Cash. Well, there isn't really much of anything going on yet. We may have the makings of the beginning of a rally, nothing particularly impressive. Ethereum Classic's in the same situation as EOS. When we look at Dash, similar situation. We didn't break the pivot on that one. More like what Ethereum is going through. And finally, Chainlink, same kind of situation, which we didn't quite break through our pivot. So in a way, these are looking a little less problematic than EOS does. So why do I think this could be a diagonal rally? Well, a diagonal is also a 5-wave rally structure. You'll have 5 subwaves within, but each subwave will break down into ABC corrective form. So in other words, our internal structures would end up looking like this instead. So perhaps this is an A, B, and a C, or perhaps our A wave was up here and we're in the middle of a B wave now with the C wave to come. And the same would be the case for the final 5th wave. What makes these tricky and unpredictable is that there's a lot of the really deep pullbacks within the structure, and they look exactly like a bearish fake out rally, basically. So this whole thing could look like an ABC, and it may look like we're about to, drop bombs away and have a lower low, but that's what makes diagonals tricky. So it's not as bearish as having a straight up impulse to the downside, a 5-wave impulse to the downside, but it's not as bullish as a full impulsive pattern. In either case, things will look really whipsaw, a lot of up and down, but we should still top out in this bigger structure in the 125 to 131 range. Even if we do follow more of a diagonal kind of pattern, we would need to see a turnaround relatively quick. We could go a little bit lower than we have without jeopardizing anything, but I would like to see this thing turn back up relatively soon, especially since we should be in the 3rd wave, and our 3rd wave should get somewhere between $1.09 and $1.14 relatively quickly. Now, I was hinting at the stock market being in a similar situation. And well, I can't emphasize enough that things have been looking very corrected to the upside. In other words, we haven't had any 5-wave impulses to the upside, at least anything of substance. We had our low in the stock market on June 17th. And I know I have a lot of clutter here. I'm going to clear up a lot of this stuff. And when you look at this, we had a 1, 2, 3, looked like a 4th wave, but we never really got a full 5th wave. Instead, we drop right back down. So this best counts as an A, B, and a C. And presumably this whole thing is a B wave. And we may be off in a 3rd wave or a C wave on the bigger picture. It's in the same situation that the cryptos are in which the best case scenario right now is that we just have a big diagonal rally with lots of 3-wave patterns to the upside, which can make things tricky. The only truly dependable landmarks within such a structure would be your ABC. So again, if this is an A wave, B wave, and this is C wave, we should see a very clear 5-wave impulsive structure in this latest rally that is taking shape. So right now, this looks a lot more like Ethereum, in which we haven't broken through our pivot zone yet. We have a lot of work ahead of us. And of course, this is the ES mini future. So this overnight action may or may not be reflected in the daytime action for the actual S&P 500. So enough with the stock market. Our big picture in EOS hasn't changed much at all. I did go over some of our reinterpretations over the last few updates. And well, we haven't broken any lows. We haven't broken any supports. We're more or less sitting exactly where we were in the grand scheme of things. We haven't had that breakout rally that we've been wanting to see to confirm or at least give us more confidence that the bottom is behind us. At the moment, I do feel that the bottom really is behind us. I don't see us going any lower, but that is still a possibility. I have a note here that we could see a nominally lower low. And when I say nominal, I mean slightly lower. I don't see anything suggesting we may see a lot lower than what we've seen. If we do break this support down here at 38 cents, I really don't know what that would mean. I think we'd get more of a warning before we break that support. That is well, basically as low as our chart goes back in 2017. We already broke this support from March 2020. So we interpreted this entire correction off of our spring 2018 high as an A, B, and a C. And no, it's not a second wave. It's a fourth wave because, as I alluded to in the past few updates, when you look at Dash, which is probably one of our oldest altcoins, that is clearly a third wave. It's best identified as a third wave with our 1-2 way back in the past before a lot of these other altcoins existed. So that's a 1-2 third wave top coincided with that of Bitcoin and Ethereum, as well as the stock market. It's a major third wave top end of 2017 into early 2018 with a lot of sideways action, which is very typical of fourth waves. And we either are in the fifth wave or we're about to begin it. One more rally to go. So in EOS, it is most prudent, or at least most reasonable, to call that a third wave top, major third wave top. And we've been in a long fourth wave pullback. That's what the green pattern is. And we should have one final rally to go. I have no reason to think this would be anything but an impulsive rally, a big 5-wave structure. Although I did mention that this smaller scale rally could end up being in diagonal form. That only takes to about $1.31, which would barely register, but would get us back above this red support that you see here. So that could mean that if we do complete this rally over the next several days, it could be the first subwave of this larger impulse. Now, if we do the math on the small picture chart, the 30-minute chart, let us assume for a second that we do get to about $1.30-ish, somewhere in that range. And then we have a relatively standard 38.2% retrace. That could project us well over $2 when we look at our fibs, the 1.764 and the 2.0 extension. And that would definitely be a lot more visible, and it would actually more or less fit this aqua impulsive pattern I have. If we get that, that would be a very clear 5-wave impulse structure, and the subsequent pullback would be a second wave, a higher low. And that would be your time to load up if you are looking for a better buying opportunity. Depending on your strategy, you may have held through this awful correction. You're not the only one feeling bad about this. It's not just people that have invested in EOS. This has been the same story across all the cryptos, across miners, pretty much every sector of the stock market, bonds, even energy. Yeah, that's right. Even with the gas prices going up, we've had quite a pullback there as well. So I see a lot of comments in my comment sections about how EOS is trash, or Dash is trash, or Bitcoin Cash is trash. That's why they crashed. Well, how do you explain everything crashing together at the same time? Does that mean everything is crash? Think about that for a second. Now, if you need to emote and give yourself some therapy, that's one thing, but eyes on the prize here. We should still see one more rally, and we have a lot of reason to believe that we have the right foundation. We've certainly gone deep enough. We have an MACD divergence, as we see below, and our overhead target is a little tricky to project. I have the standard target using Dash as my model. I kind of reenacted what we see in Dash, about a 38.2% retrace for a fourth wave. This box is about where I'd expect EOS to land. Very tough to tell until we have a bigger impulsive structure to make a more confident projection. So this could get us up to $17+ as a minimum target. There will be a strong resistance at both our high back in 2021 of about where was that, about 1526, as well as around 2358. I believe that was our all-time high. And once this happens, I do expect this to be part of the everything top. I've been talking about this in all my videos, but there are some very eerie and uncanny trend line analyses, as well as Fibonacci time analyses, that seem to project sometime during 2023 as being a major coincident top. There's a lot of confluence there between pretty much every asset class you can think of. And I have a video on that. Check that out if you're curious, but that will be the time to start preparing. I know everything feels terrible at the moment, but we're much closer to a bottom than we are to a top. I've been saying the same thing. There really isn't any other catalyst at the moment. There's no setup for us to go any lower. And let's say this is the doom and gloom and we're about to start a multi-year bear market. We would need to see a big bounce here first. Assuming this is a first wave down, we need to see a big second wave bounce before we have more follow through. So we don't have any clear indication of more lower lows. So keep your eyes on the prize. If you have too much cash tied up in EOS, I strongly recommend breaking that up, buy a bunch of different kinds of altcoins. Unless you're in just Bitcoin or Ethereum, please diversify. It's just like picking speculative stocks. You don't know which ones are going to outperform and which ones are going to crash. You're going to have plenty more updates coming your way. Subscribe so that you don't miss those. And if you enjoyed my video, don't forget to give me a like. Until next time, thank you for watching and happy trading.